Settle. It's late enough now. You don't need to do anything with this story. You don't need to remember the dates. You don't need to form an opinion about markets, or history, or anything waiting for you tomorrow. If your eyes are already heavy, you can let them close. If your mind is still moving, you can let it walk a little slower beside the words. There is no quiz at the end. There is no chart you must hold in your head. There is only a long, quiet telling of something that already happened. This is Market Nightfall. Soft histories of markets for sleep. Tonight we're going back to New York in the autumn of 1929. Not to chase a lesson. Only to sit near a noisy room that once tried to price the future and then, for a while, could not keep up with itself. There's no urgency here. The session we're visiting has already ended, almost a century ago. Nothing in it requires your action. The open has opened. The close has closed. The paper has yellowed. The voices have gone home. You can fall asleep in the middle of a sentence. That is allowed. That is the point. If you wake later and return to the sound, you do not need to rewind for continuity. This story is built like weather. You can enter it at any cloud. Let your shoulders drop a little. Let your jaw unclench. Let the day become a hallway behind you, with the lights already dimmed. Place and time. Picture late October. Not the bright postcard version of New York. A cooler version. Wind along the harbor. Coats buttoned higher. Early darkness coming earlier each evening, as if the city were practicing for winter. Downtown, the streets are narrower than the idea of Wall Street. Stone and shadow. Windows lit in uneven rows. If you let your mind invent the air, there is coal smoke, and river water, and newsprint, and the faint metallic suggestion of rails and radiators and coins. People still said the street and meant a few blocks where paper promises changed hands all day. Stocks. Bonds. Tips written on slips. Names of companies that made radios, automobiles, steel, utilities, things that hummed and promised modernity. Above the street, offices stacked like drawers in a cabinet. Inside them, telephones, chalkboards, cigars, coats on hooks, the low social weather of men who believed they were standing close to the country's forward motion. Outside, messengers moved between buildings with the particular haste of people paid to compress time. A few minutes could be a career, or a rumor, or nothing at all. Further uptown, the city performed a different evening. Theaters. Hotels. Apartments with better lamps. Conversations in which the market appeared as sport, or as status, or as a kind of modern folklore. Someone had heard something. Someone else had doubled something. Someone's cousin was in radio. Someone's neighbor had been right too many times in a row. You don't need every neighborhood tonight. Hold only the contrast, a small geographic engine downtown, and a much larger public imagination surrounding it. And then, a Thursday. October the 24th, 1929. Later it would be called Black Thursday. Names like that arrive afterward, when people need a handle for a day that felt larger than a date. On the morning itself, it was simply Thursday. A session. A room full of human volume. A date on a calendar that did not yet know its nickname. The long fair weather of the 20s. Before we step into that Thursday, we can walk a little more slowly through the decade that made Thursday feel surprising. In the 1920s, many stories about prosperity had become ordinary. Ordinary enough that they no longer felt like stories. They felt like weather. A long stretch of fair weather, spoken about in newspapers and club rooms and over late dinners. American industry had learned new scales. Factories arranged themselves into sequences. Assembly lines turned complicated objects into rhythms. Automobiles changed evenings and distances. Radios brought the same voice into separate living rooms, so that private nights could share a public sound. Electricity spread a cleaner kind of light into more houses, and with light came appliances, and with appliances came the soft suggestion that the future was a set of switches. Cities thickened. Skylines practiced ambition. Advertising learned to speak in wishes. Magazines made modern life look like a sequence of solvable problems, a better stove, a better soap, a better way to arrive somewhere faster. And the stock market, for many, became a way of standing near that expansion. Not everyone. Never everyone. Large parts of the country remained far from tickers and tips. Farms had their own hard arithmetic. Whole communities had little reason to treat Wall Street as a second living room. But enough people, and enough money, and enough storytelling in the papers, that the market began to feel like a public square for optimism. Prices for many well-known companies had risen for a long time. Rising prices create their own soft logic. They reward the people who already believe. They make caution look slightly old-fashioned, the way a heavy coat looks old-fashioned on the first warm day. There is a particular social temperature that forms in long advances. Conversations become lightly competitive. Someone always knows a name you haven't bought. Someone always has a story that ends with a number larger than last month's number. The quiet person at the edge of the table begins to wonder whether quietness is prudence or merely lateness. Brokers' offices could feel social. Chalkboards. Smoke. The tape. Someone reading quotations aloud. A sense that the country's energy was being translated, tick by tick, into numbers you could watch. In that atmosphere, the market is not only a market. It becomes a mirror in which a culture inspects its own confidence. You may know smaller versions of this feeling in other eras, other rooms. A long winning streak at anything makes the streak feel structural. People begin to build plans on top of plans, as if the weather had signed a lease. Credit, margin, and borrowed confidence. Underneath many purchases sat credit. You don't need a lecture. Only a slow image. Some buyers were not only buying a share. They were buying a share with a promise attached, a loan that assumed the future would remain polite. In the language of the time, much of this lived near words like margin and call loans, money borrowed against securities, money that could be comfortable in sunshine and meticulous in rain. Imagine a board resting on water. When the water is high, the board feels stable. People walk across it without thinking of the water at all. They think of destinations. They think of speed. They think of how clever they were to step on when they did. If the water lowers, the board is still a board. But every step remembers the water. Borrowed money is like that. It is ordinary until it isn't. It is invisible while prices rise, because rising prices make the loan feel smart. It becomes visible when prices fall, because falling prices make the loan feel like a second weather system inside the first. There were banks and brokers and arrangements designed to keep this machinery turning. There were rates and customs and the daily hum of short-term money moving between institutions. Most of it never appeared in popular conversation except as a vague sense that the market was easy to enter. Ease is a gentle word. It can hide architecture. For years, the future had mostly been polite. Politeness in markets is not manners. It is the continued willingness of buyers to meet sellers at higher or at least familiar levels. It is liquidity behaving like a public utility, assumed, unthanked, unnoticed. When politeness thins, people discover how much of their calm was outsourced to the crowd. How the exchange room worked. Before the drop becomes the only thing people remember, it helps to remember how the room worked. The New York Stock Exchange was not a cloud of green numbers. It was a floor. Bodies. Voices. Posts where certain stocks were traded. Clerks. Messengers. Specialists standing in place like fixed stars while the crowd moved around them. If you stood in the gallery of imagination, you would see a kind of contained weather system. Arms lifting. Paper flashing. Men leaning into one another's hearing. A choreography that looked like chaos from far away and like procedure from close up. Prices were written and shouted and relayed. A price is a temporary agreement. It is not a stone. It is a handshake that lasts until the next handshake. On quiet days, those handshakes form a gentle chain. On heavy days, the chain jerks. Around the human weather ran the ticker, a thin machine language, clicking out quotations on a ribbon of paper. In ordinary hours, the ticker was a kind of heartbeat you could glance at and trust to be nearly now. Nearly now mattered. If you were far from the floor, in a brokerage office uptown, or in another city, watching the tape, the ticker was how the market arrived in your room. A moving present tense. A stream of abbreviated names and numbers that felt like reality itself, condensed. People built habits around it. They watched it the way later generations would watch screens, not always with full attention, but with a readiness to flinch. The tape could make a lunch taste different. The tape could turn a casual afternoon into a vigil. On ordinary days, the machinery was almost invisible because it kept up. On extraordinary days, machinery becomes a character. Not a villain. Just a thing with limits. Paper can only print so fast. Messages can only move so quickly through hands and wires. A room can only clear so many intentions at once. There is something almost tender about that limitation, if you look at it from a great distance. Human systems always discover their bandwidth at the worst possible moment. That is one of the quiet rhymes of history. The ticker and the delayed present. Let us stay with the ticker a little longer, because Thursday will not make sense in the body without it. A delayed quotation is a strange object. It looks like information. It wears the costume of information. It has numbers and abbreviations and the authority of machinery. And yet it is a letter from a few minutes ago, arriving dressed as a live broadcast. When the present tense breaks, people do not always notice the break immediately. They notice a feeling first. A lag between what they fear and what they can confirm. A suspicion that the world has continued around a corner they cannot yet see. In offices away from the floor, men stood close to the tape as if proximity could restore simultaneity. Someone read aloud. Someone calculated on a pad. Someone tried to telephone and found the telephone busy with everyone else's attempt to do the same. Time, under those conditions, becomes viscous. Minutes thicken. A clock can look rude for moving at its usual speed. On the floor, the problem was different but related, not the late arrival of news, but the sheer density of orders meeting a finite set of human and procedural channels. Markets are often described as instantaneous. They are not. They are fast until they are crowded. Crowding is not only physical. It is intentional. Too many revisions of the future, attempted at once. September and the unsettled weeks. You don't need the whole decade tonight. Only the feeling of a long climb that people had begun to treat as a kind of floor under their feet. Then September came, and the architecture made a sound. Not yet the sound later generations would compress into a single mythic crash. More like a series of unsettled sessions. A market that had been graceful beginning to move with less grace. Rallies that did not quite restore the old confidence. Declines that arrived, left, returned. By mid-October, the air downtown had changed in ways people felt before they agreed on language for it. You may know the feeling in smaller forms. A room that was easy last month becomes slightly harder to be inside. Conversations shorten. Jokes thin out. Everyone is still performing normality, but normality is doing more work than usual. There had been warnings, of course. There are always warnings in a large system, the way there is always weather somewhere else. Some bankers worried. Some economists worried. Some ordinary people simply never arrived to the party. History is not only made by those who are loudest in the month before a turn. Newspapers, as newspapers do, carried both cheer and caution in adjacent columns, like a city block with a bakery beside a pharmacy. Readers chose the window that matched their mood. In brokers' rooms, the social temperature shifted by degrees. A tip that would have been shared eagerly in spring might be shared more carefully in October. A decline that would once have been called an opportunity might now be called a question. Markets do not only reprice securities. They reprice stories. The story of permanent ascent had begun to require more maintenance. Wednesday night into Thursday. Imagine the night before. Orders gather after the close the way weather gathers against a shoreline. Some are ordinary. Some are defensive. Some are the paperwork of people who have not slept well. Some are institutional and large. Some are small and personal and, to the person who wrote them, enormous. The market is closed, but the mind of the market is not. Telephones still work. Conversations still happen in dining rooms and hotel lobbies and long-distance lines. Someone says it will stabilize. Someone says it will not. Someone says they have seen this before, even if they haven't. Sleep, for many connected to the street, becomes lighter in weeks like this. Not always from fear. Sometimes from arithmetic. Sometimes from the simple bodily knowledge that morning will ask for decisions. You can let that night remain dark and mostly wordless. We do not need to invent dialogue. We only need the sense of a city holding its breath without admitting that it is holding its breath. And then morning. Black Thursday morning. Thursday morning, October 24th. When the exchange opened, selling arrived in size. Not a single theatrical shout, though there was noise enough. More like a pressure system. Many intentions at once, leaning the same direction. Prices in major names moved down. Then further down. The kind of movement that makes a board of numbers feel less like a scoreboard and more like a window during a storm, something you keep checking, as if checking were a form of holding on. Volume rose. Volume is a dry word for a very human thing, agreement and disagreement happening at speed. Every transaction is a meeting between someone willing to let go and someone willing to take on. On a heavy day, those meetings stack until the building itself seems to hum. If you imagine the floor from above, the crowd thickens around posts. Specialists and brokers try to find prices where buyers still exist. In some stocks, buyers become scarce at levels that had seemed ordinary only weeks before. In a market, scarcity of willingness is its own kind of weather. Outside, messengers run. Telephones work as hard as telephones can. Rumors move at the speed rumors always move, which is to say, faster than verification and slower than fear's imagination. If you are listening for a single villain, you will not find one cleanly tonight. Large declines are rarely a novel with one antagonist. They are many ordinary decisions, many forced decisions, many hopes revising themselves at once. Some selling is voluntary. Some is compelled by the quiet mechanics of credit. When loans rest on prices, falling prices can request more cash or more surrender. that request does not arrive as poetry. It arrives as procedure. By late morning, the decline had become the day's fact. The ticker began to lag in earnest. This is one of the details worth sitting with, slowly. When the ticker lags, the present tense breaks. The ribbon still moves, still clicks, still offers numbers, but the numbers are late. People in offices away from the floor are watching a market that has already continued without them. Minutes can feel like rooms you cannot leave. A slower walk through the morning hours. There is no need to turn the morning into a stopwatch drama. Sleep does not benefit from countdown energy. But we can pass through the hours the way one passes through rooms in an old house, touching the banister. Early on, the open is simply the open, a threshold. Orders that waited overnight meet the first printable prices of the day. If those prices gap away from yesterday's memory, the body registers discontinuity before the mind completes its explanation. Then the first wave of adjustments. People who told themselves they would see how it opens now see. Seeing becomes selling for some, waiting for others, bargaining for others still. Mid-morning is often where a difficult session stops being a surprise and becomes an environment. Voices get rawer. The social performance of calm becomes more expensive to maintain. Clerks stop thinking about lunch. Messengers stop distinguishing important errands from urgent ones because urgency has flooded the category. On the tape, names appear and reappear with numbers that refuse to stay still long enough to comfort anyone. An average, that lantern held over a crowd, tips lower. People who do not know individual stocks still know the average, because the average is the story simplified for transport. By late morning, simplification itself begins to fail. There is too much detail, too much speed, too much contradiction between what one person heard on the floor and what another person read on a delayed ribbon 2 blocks away. This is what overload looks like in a pre-digital market, not a frozen computer, but a living system sweating through its own channels. Midday and the bankers. Around midday, a different kind of meeting took place, not on the open floor, but in the quieter rooms where institutions try to steady a narrative. A group of major bankers assembled. The details would be retold many times later, polished by memory and newspapers. The broad shape is simple enough for sleep. Powerful firms decided that a visible act of support might matter. Not magic. Not a rewrite of arithmetic. A signal. A willingness to buy, in size, in important names, to show that the floor still had a floor. On the exchange, a representative associated with that effort moved into the crowd and placed large purchase orders in key stocks. For a while, prices steadied. In places, they lifted. The room felt a shift, the way a heavy weather system can seem to pause when wind direction changes, even if the sky stays gray. People who had been watching only decline now had a second sentence to tell themselves, perhaps the worst of the morning was the worst of the day. The ticker, still burdened, still late, eventually carried the improved quotations outward. Relief moved through brokerage offices in uneven waves. Not joy, Exactly. More like the body unclenching 1 degree. It is important, for the tone of tonight, not to turn this into a hero legend or a failure legend. It was an intervention in a stressed market. It helped the afternoon more than the morning. It did not repeal the season. Still, on Thursday, the close was better than the depths of the day. That matters historically. Black Thursday is remembered as a shock, and it was. It is also, if you look closely, a day that tried to catch itself. Markets do that sometimes. They stumble and reach for the banister. What support means, softly. Support, in a market, is often misunderstood in popular retellings. It is not a guarantee. It is not a parent catching a child in midair forever. It is a set of bids large enough, and visible enough, to change the immediate psychology of sellers and the immediate arithmetic of the open outcry. For a few hours, that can matter enormously. People are narrative animals. Even traders who claim to be pure numbers are, in difficult moments, looking for a sentence that makes the next minute livable. They are buying the leaders is such a sentence. It travels. It multiplies. It buys time. Time is sometimes all a market needs to reorganize. Sometimes time is only a pause before the next reorganization. On Thursday afternoon, time was partially purchased. You can imagine the floor's noise-changing texture, still loud, still crowded, but no longer only one direction of gravity. A two-way market is a different bodily experience from a one-way market. In a two-way market, hope and fear can share the room without either fully evicting the other. Afternoon toward the close. As the session aged into afternoon, the story of the day became layered. There was the morning's break. There was the midday attempt to brace the furniture. There was the ongoing problem of volume and delay. There was the simple human fatigue of voices that had been bargaining for hours. Some prices remained far from their recent comfort. Some recovered enough to let people breathe. The tape continued its late confession of what had already been true. Near the close, a market often performs a final compression of intentions, people who must be flat, people who refuse to be flat, people who have waited all day for a clarity that never quite arrived and now accept the imperfect clarity of the bell. The close is a ceremonial fact. It does not end anxiety. It ends the official recording of anxiety for that date. After the close, the city filled with incomplete stories. After the bell on Thursday, some people had lost paper fortunes in a morning. Some had been on the sidelines and felt a complicated mixture of dread and confirmation. Some clerks simply had the longest day of their working lives, hand-stained with the ordinary labor of recording extraordinary volume. Newspapers prepared their language. They always do. Language arrives after the body has already spent its adrenaline. If you read later summaries, you will find large figures, shares traded, points lost in averages, percentages that look clean because percentages are designed to look clean. Behind each clean figure were rooms like the ones we have been imagining, voices, delays, margins called, plans revised, dinners cancelled, sleep broken or strangely deep. The Dow Jones averages, those compressed stories made of selected prices, had fallen hard from their earlier heights in the weeks around this time. An average is a lantern held over a crowd. It shows something true and leaves most faces in shadow. You do not need the exact points tonight. Hold instead the softer truth. A long public faith in rising prices met a week when rising could no longer be assumed. Credit tightened in the only way credit knows how, by becoming less willing. Loans against securities are confident in sunshine and meticulous in rain. And yet Thursday, by itself, was not the whole turn. History packs poorly when we force it into one date. The session was a door. Other doors followed. Friday and the need to declare a bottom. Friday brought attempts at recovery, and the human need to declare that the worst had been seen. This need is older than markets. After a shock, communities reach for closure the way cold hands reach for pockets. That was the low. The bankers have it. The weak have been shaken out. Sentences like these are blankets. Sometimes they warm. Sometimes they only look like warmth. Trading sessions after a famous day are haunted by comparison. Every bounce is asked whether it is salvation. Every dip is asked whether it is the sequel. You can let Friday remain a lighter room in this house of the week, not because it was trivial, but because sleep does not require every tick. Know only that the market, having stumbled and caught the banister, tried to stand more normally, and that normality was still provisional. The corridor of the weekend. Weekends in market history are strange corridors. The exchange rests. The mind does not. Conversations continue in houses and clubs and over long-distance lines. People try on explanations the way they try on coats. This one makes me feel safer. This one makes me feel sharper. This one I refuse to wear. Some explanations blame the public. Some blame the banks. Some blame foreign markets, or domestic policy, or moral decay, or mere chance. In soft history, we do not need to referee all of that tonight. We can notice the human pattern. When prices break, stories multiply to fill the gap where certainty used to live. Churches and dining rooms and hotel bars become temporary exchanges of narrative. The official market is closed, the market of meaning is open all night. For people who had bought with borrowed money, the weekend could feel less like rest and more like a paused film, the next frame already implied. For people with no positions at all, the weekend might pass as ordinary autumn, children, errands, cold air, with the crash existing mainly as a headline at the edge of vision. Both experiences were real. History is large enough to hold them without forcing them into one emotion. Monday and Tuesday, remembered more darkly. When trading resumed in force in the sessions that followed, the pressure returned, heavier in memory for many than Thursday itself. Monday the 28th and Tuesday the 29th would take their own dark nicknames in the public mind. Prices gaped downward. Volume overwhelmed. The ticker's lateness became, again, part of the trauma of watching. From a distance of decades, these days blur into a single phrase, the crash of 1929. Up close, they were a sequence of sessions, each with an open and a close, each with people going home afterward into apartments and houses where the telephone might still ring, or might mercifully not. On such days, the machinery we described earlier becomes almost the main character again. Not because machines cause the selling, but because machines and procedures reveal the scale of human revision. When the ribbon cannot keep up, the public receives its own fear in installments, delayed and therefore multiplied. There were rallies inside declines, and declines inside rallies, because markets rarely move as cleanly as their legends. But the legend, later, would smooth the weak into a fall. Smoothing is what memory does when it is tired. What the numbers meant, and what they didn't. It is tempting, in finance storytelling, to let numbers do all the emotional work. So many points. So many %. So many shares. Numbers are useful. They are also a kind of anesthesia if used carelessly. They can make suffering look neat. They can make complexity look like a single staircase down. Behind the averages were specific equities with specific holders, long-time investors, recent arrivals, trusts, individuals who had treated a brokerage account like a second trade, people who had never intended to become short-term actors and found themselves trapped in a short-term storm. Behind the volume were clerks whose feet hurt. Specialists who had stood in one place for hours. Runners who knew the shortest paths between doors the way foxes know hedges. Wives and families receiving incomplete bulletins. Out-of-town customers telegraphing instructions that arrived into a present already gone. If this were a different kind of channel, we might now stack causes into a tidy tower: valuation, credit, confidence, policy, international gold arrangements, structural weaknesses in banking, and so on. Those conversations have their place. Tonight, causes can remain in soft focus. Not because they are unimportant, but because sleep is not a seminar. The feeling we are carrying is simpler, a public story of ascent met a week when ascent failed as an assumption. The long shadow, kept in the next room. In the months and years after, the American economy moved into the long hardship remembered as the Great Depression. Banks failed in waves across the country. Unemployment rose into living rooms that had never studied a ticker. The market's break was not the only cause of what followed. History is braided, not single-stranded, but the break became a symbol that could be held in one hand. Symbols are easier to carry than systems. For our purposes tonight, we can leave the long depression mostly in the next room, door half closed. Its weight is real. It does not need to sit on your chest while you are trying to sleep. What we keep is smaller and closer: a Thursday in New York, a lagging ticker, a midday attempt to steady the furniture, an autumn that ended the easy story of permanent ascent. If your mind wants to follow the next room's light under the door, breadlines, policy experiments, later reforms, later booms, you can do that another night. Market Nightfall has time. The catalogue of quiet histories is long. The exchange after the storm light. If you return, in imagination, to the floor after the worst hours, you might notice how ordinary objects remain. The posts are still posts. The paper is still paper. The building does not abandon its geometry because prices changed. People sweep. People tally. People go home with sore feet and replaying conversations. Institutions, when they survive partly by continuing their rituals. Open. Close. Report. Clear. Begin again. In time, rules would change. Practices would change. The country's political answers to financial fragility would change. Those are other nights, longer nights, for other episodes, the quiet machines of clearing houses, the birth of new oversight, the slow evolution from paper ribbons to glowing screens. Tonight is only the texture of the turn. A boom is a kind of public dream that uses numbers as its language. A sharp decline is the same language becoming difficult to speak. Between them is not empty air. Between them are clerks and specialists and investors and borrowers and the soft mechanical patience of machines that click until they cannot click fast enough. Side rooms, the cool money market. There is a side room in this history that rarely appears in popular retellings, and it is useful for sleep because it is more mechanical than dramatic. Much of the 1920s market rested, in part, on short-term borrowed money. Brokers borrowed. Customers borrowed through brokers. The availability and price of that short-term money influenced how easy it felt to carry positions overnight and through weeks. You do not need the full plumbing. Hold a simple image, a tide of short-term credit moving under the visible prices, like cold water under a warm surface. When the surface is calm, nobody stares at the water. When the surface breaks, people suddenly care about tides. In unsettled weeks, the cost and confidence of that short-term money can shift. Lenders become more careful. Borrowers feel the carefulness as pressure. Pressure becomes selling when selling is the available door. This is not a morality play about debt. It is a description of coupling. Two systems, prices and credit, fasten together so that motion in one can become motion in the other. If that feels abstract, you can translate it into the body. A person carrying packages that were light while walking downhill discovers the same packages are heavy on flat ground. The packages did not change their labels. The slope did. Side rooms, offices away from the floor. Not everyone lived on the exchange floor. Most people who felt the week felt it through glass and wire and paper. Picture a brokerage boardroom uptown. Chairs. A blackboard. A ribbon. A clerk with a voice trained to remain even while reading uneven news. Customers arriving with coats still on, as if refusing to commit to staying. Someone asking whether a particular name has printed. Someone else pretending not to listen while listening with their whole posture. In cities far from New York, the market arrived even more delayed, more mythic, more dependent on telegraph summaries and morning papers. Distance can soften panic, it can also intensify fantasy, because confirmation is scarce and imagination is cheap. There were people who checked once and went back to work. There were people who checked as if checking were a job. There were people who could not check at all and received the week only as a change in someone else's face at dinner. All of these are part of market history. The floor is the bright center. The periphery is where most lives actually were. Side rooms, newspapers, and the morning after language. Journalism has a difficult assignment after a heavy session. It must turn a cloud of simultaneous events into sentences that fit columns. It must select a lead. It must choose adjectives. It must decide whether to soothe, alarm, explain, or simply inventory. On the morning after a famous market day, language becomes part of the market's afterlife. A headline can steady a reader or startle one. A photograph of a crowd can imply more narrative than the caption can justify. An editorial can discover a moral with suspicious speed. We will not relitigate old editorials tonight. We can simply notice that the public does not only trade securities. It trades interpretations. And interpretations, once printed, travel into kitchens and train cars and barber shops, where they continue to trade themselves without a ticker. If you are drifting, you do not need any particular headline. Let the idea of a newspaper be enough: ink, fold, the soft rasp of a page turned by someone who is already tired. Side rooms, London, cables, and the wider mirror. New York did not exist alone on the financial map. London had long been a center of capital and habit. Cables carried prices and rumors under oceans. A break in one center can become a question mark in another before it becomes a full story. For sleep, we do not need a tour of international finance. Only the reminder that what felt intensely local on Wall Street, a floor, a ribbon, a lunch foregone, belonged to a wider web of obligations and expectations. Someone in another city woke to numbers that had been made while they slept. Someone else went to sleep while numbers were still being made. Time zones turn markets into relays of unease and relief. You can imagine the Atlantic as a dark field, and under it a thin line of language pulsing, prices, names, short sentences stripped of comfort. Then you can let the ocean go dark again. The specialists still point. Return, for a moment, to the floor's fixed stars, the specialists at their posts. Their work, in ordinary times, was a craft of continuity, standing in one place while the market moved around them, facilitating trade in particular names, absorbing the odd lot of human impatience that arrives as orders. On an extraordinary day, the craft becomes heavier. Continuity is harder to manufacture when one side of the market thins. The still point is still a still point, but the weather around it has increased. There is something almost monastic in the image. If you strip away the shouting, a person remaining in place while information storms past. Not calm necessarily. Placed. If your own mind is storming tonight with unrelated weather, tasks, messages, half-finished worries, you can borrow the image without borrowing the job. Be the post for one breath. Let thoughts pass as orders you do not have to fill before morning. A gentle reprise of the week. If you are still awake, we can place the pieces once more on the table, lightly, like someone tidying a desk before bed. There was a long climb in the 1920s, fed by real industrial change and by a rising comfort with market participation, and by credit that made participation easier than it looked. There was an autumn in which the climb became uneven. There was a Thursday when selling arrived in size, the ticker lagged, and the morning felt like a room losing its balance. There was a midday effort by powerful bankers to show support, and an afternoon that recovered from the worst prints without erasing the shock. There was a weekend corridor of talk and incomplete explanations. There were further sessions that, in collective memory, fell harder still. There was, afterward, a long national difficulty that this telling will not drag across your blankets. That is enough structure. You can let the structure dissolve. Returning to the room you are in. Wherever you are listening from, the New York of 1929 can become small again. Let the stone buildings recede into a model of a city, then into a photograph of a model, then into a thought of a photograph, then into nothing you need to hold. The ticker slows until it is only a faint metronome at the edge of hearing. Then even that can go. October becomes a word without weather. 1929 becomes a shelf of quiet facts you do not have to organize. If parts of the story are already blurry, good. Sleep is a kind of gentle editing. It keeps what it needs and softens the rest. There is nothing to solve before morning. No position to check. No open that requires you. No margin call in your hallway. No messenger at your door. Only a room you are in, later than you meant to be, and a voice that can get quieter as you go. If thoughts of your own day try to enter, messages, tasks, unfinished sentences, you can set them on an imaginary windowsill facing away from the bed. They will wait. They are patient in a way that anxiety pretends only it can be. Soft inventory of release. You might release the names of companies you do not need. You might release the arithmetic of averages. You might release the question of who was right in September. You might release the image of the crowded floor until it is only a low murmur, like water in pipes in another part of the house. You might release the bankers meeting into a closed mahogany door with no obligation to open it. You might release Monday and Tuesday into a distant weather report. You might release the depression's long hallway back into books for daytime. What remains can be almost nothing: autumn air, a stone street, a ribbon of paper moving more and more slowly, and then stillness. Drift close. You can stay for the quiet a little longer, or you can leave mid-thought. Either way is correct. This has been a soft telling of Black Thursday and the late October days around it, history for rest, not a guide to markets, not advice, not a warning aimed at your life. Nothing here is a recommendation to buy or sell anything. Nothing here asks you to be wiser before sunrise. Wisdom can sleep too. If you are still with me, let the last images be kind ones: a window dimming, a coat hung up, a ledger closed, a city continuing under clouds that do not require your management. If you are already gone into sleep, this sentence can fall into the dark without landing. This has been Market Nightfall. Sleep well. Ambient tale cue. Narration ends here. Soft room tone may continue, like the building's own breathing after the lights are lowered. No story left to follow, only a steady, uneventful quiet in which the body can finish what the mind has already begun.